Hi, I'm Roger Montgomery and welcome to this week's Video Insight. I don't know about you, but I sit on the side of the fence that suggests Australia is going to do well next year. I've just been talking to a very good friend of mine who owns commercial real estate, and he tells me that the turnover figures, the retail sector, are starting to improve. He's looking at the October numbers, and those October numbers are looking good. That suggests to me that this could be the low point for the likes of Channel 10 and Myer and David Jones and maybe even Fairfax. They're not the sort of businesses that we own. Having said that, there is an argument that things in Australia could get a lot worse. The mining industry suffers from ongoing booms and busts, and the reason for that's quite simple. It's the long development time required to build a mine. When prices are high and the opportunity to make a profit exists, then what we find is that mining companies start the process of developing mines for future production. As they do so, supply increases and the price drops, and those late to the party or the marginal operators find there's no profit for them at all. Australia has just enjoyed a massive boom. It should have ended in 2008 when China started slowing down, but their stimulus continued the party for much longer. 10 years ago, Australians didn't believe there would be a mining boom, and now many analysts are extrapolating the recent past out into the indefinite future. But just as a tickle starts making you laugh, then turns to tears, then becomes painful, so financial stimulus fails to be as effective when used repeatedly. Already the latest round of stimulus in China is failing. And what does this mean for Australia? Well, Australia's monetary system has enjoyed a record boom thanks to foreign inflows that have supported the mining construction boom and mine development boom. The expectations that that will continue could very well be wrong, and the trigger, which is currently seeing the capital flow in and support the Australian dollar as well as real estate and so forth, could start flowing out. And what will be the trigger that will see that occur? I think it'll be major mining projects failing to secure overseas financing. We'll then start to see the capital account flow out, along with a drop in the iron ore price. That would mean a substantial increase in the balance of payments deficit. We could have our own fiscal cliff next year. That's the argument. I'm not sure it's going to occur, but that's the picture that's being painted by some. Keep an eye on that capital account in the balance of payments. Make sure you follow us on Twitter and Facebook, and I look forward to seeing you again next week.